Hi everyone, this is Joe Henches for Beyond the Chart, and this is a weekend update of potential trade opportunities, things I'm looking at, trade ideas, let's call them. This is for Monday, October 28th. Let's start off with Apache. I'm going to hit some of the ones I talked about last week, and then we'll move on. Apache, I exited, as you can see by this arrow right here, at 89.62 when I got the close below the previous 2 days here. Had it gotten in right around, actually I got in at 87.12, exited at 89.62, so had a decent little profit on the options there. Was getting this divergence that's starting to show up, and I'm starting to see this in a lot of different stocks. So it's really raising, as I said in the update yesterday, a caution flag. Expedia. I also exited Expedia mainly because I got out at 48.78, and that would have been, I think it was Tuesday morning. When I saw, I was expecting this to continue to roll over and plunge again. And I'm going to get rid of this for right now. But when I saw it take out the high, this was Monday's high of 48.66. When it did that on Tuesday, I was like, okay, I think I've had enough. I've been in this for, long enough, and it's not doing what I expected it to do. So I got out, and it's a good thing I did because it continued to push higher. So that's it on Expedia, and I'm not going to continue to follow this because it doesn't meet my minimum, parameters that I've got that I've laid out in my. If you look at my options page on my website, you will see where I talk about stocks that I follow as well as some of the option parameters and things like that. But I talk about stocks I follow, and it really doesn't meet those parameters, so I'm going to drop it for the future here. Let's talk about Yandex. Yandex. Okay, I got out of Yandex Wednesday right before the close, and the main reason is because the earnings were coming out the very next day, and I was seeing this divergence that was occurring. And again, this is a reoccurring pattern that I'm seeing, and I thought, okay, I'm getting out. So again, had a pretty good little profit. And got out, captured it, and then it was mostly down the very next day, and they popped the premiums on that option, and then Friday they sold it off. So that turned out pretty well for me at this point. Let's go to KLAC. I'm going to try to get through these pretty fast. I wasn't in this one, but we talked about how got a signal and you could stay in, and then it got the close below the previous 2 days. Right here at 63.05, so that would have been a decent exit. Let's see, the next one I was looking at, Yahoo. I talked about this last week, and I talked about getting in right here above the high of these two, and that it just rolled right over on us and came down. Now I got out right in here, and I got to tell you, I should have got out right here. I should have got out at the close below these previous 2 days, and I'm going to start using this exit, this close as a stop more times than not, even as my initial stop, because if it's turning around and doing this kind of activity, that's not a good sign. It should be, maybe going sideways or pushing up immediately if you got a good trade going on. So anyway, I should have exited here, and took a loss on that option trade. Not very happy about that one at all. That one was a bad one from the get-go. And this is a stock that does not meet the minimum requirements that I've kind of set in terms of the beta of at least 1.5. And so I'm going to stop tracking this one until that parameters change on me, change for me. Let's go to Solar City. I'm not in this, and I think we were talking about how it was tracking really well, and actually if you had gotten into this, using a close below the previous 2 days low, you would still be in this. And I'm not seeing any negative divergence in here like I'm seeing in a bunch of others. So right now this one still continues to track okay, but because you're outside the Keltner channel, I would, you got to be a little careful. But again, use one of these stop parameters and you'll be fine. You'll be able to capture your profit. 7, Yoku. Yoku to-do. Okay, here's another one where I talked about getting in on Monday. And this is very similar to Yahoo. It just rolled over, and exiting on Friday's close would be the thing to do. Now you would have taken a little bit of a hit here, 2 points on the stock, and depending on the type of option you bought, that would tell you, how much your loss would be on the options. And this is this combined with the big hit that NQ Mobile took, where they killed it by over 50% on Thursday, and another 10% on, well, actually 40-some% on Thursday and over 10% on Friday. I'm starting to get a little, that's why I was cautious yesterday. I'm starting to see some of these where they're really starting to roll over now. Let's see. Silver Wheaton is the next one I want to take a quick look at. Again, I talked about last week, if I got a close below the previous 2 days and below the blue line, did not get that. So there, no play, did not do anything here. I still think this doesn't look positive yet. It may be trying to turn, but you still got the 50 below the 200. You got the 20 below the 50. This is still trending down in my book. Look at CU. Now here's another one that I'm not continuing to follow. Where is it? Shangyu is what they call it, and I call it CU because of its ticker symbol. Now I talked about, again, a close above these two highs to get in. Never got that close, and then this has rolled over and sold off. Now here's the thing about this stock. The volume is not even close to what I need. Look, the 50-day volume's 268,000 shares is the average over 50 days, and that's just too low. It's not going to be liquid. And I started looking at the options, and the spread on the options on this stock were like $40. So bidding like 200 and asking $240. Well, that's just not a workable situation. So I just said, okay, I will not continue to follow this stock out into the future. Let's look at Quahoo, which is Quahoo 360. There it is. Okay, this is one, again, I started looking at. It was kind of negative, getting divergence. It's gone, another divergence, and we're getting that the 20-day has flattened out. Now we got this reversal bar right up here, and I call it RP. It's a reverse plunger. The plunger name comes from a guy named Floyd Upperman, and Floyd is a commodities trader. I was kind of following him back, I don't know, 2008, and he wrote a book, and one of the things he kind of patented his terminology is this reverse plunger and a forward plunger, and really it's a bar. It goes to a 10-day high and then closes in the lower 30% of that daily range. It's very negative. And of course, I take it one step further and say I'd like to see a close below that bar. And that's really where I should have gone short, right here at 89.34. But I went short Friday at 87.38 in puts. And the main reason is this stock is very extended. Okay. I think you had 1, 2, 3, 4. This is the fifth move. This is an extended fifth wave. This has a tendency to reverse very quickly and go quite far in a reversal. So I'm very negative of the stock. And, there was a candlestick on a weekly that was a very dark cloud, very negative. Okay. The other one that I mentioned last week that I'm watching, looking for a sell signal, is Moss. Moss, I call it Moss, is Mosaic, and it has not rolled. It's starting to roll over, broke this trend line, and again, this looks negative on a weekly too in terms of a bear flag. This looks like a flagpole and a little flag upside down. So I'm kind of bearish, looking for a signal on this one, but I'm not in it yet. So that's a quick summary of a bunch of stocks and some opportunities, things we're looking at. Watch Quahoo and watch Mosaic. And we will talk to you on Tuesday for sure. Have a great Monday. This has been Joe for Beyond the Chart.